Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
Think of it like a tamper-proof spreadsheet shared globally, where every line is time-stamped, it's validated, and it's locked forever.
If you hear words like crypto, Ethereum, and blockchain, and you feel confused, you're definitely not alone. Today, we're sitting down with someone who's been in crypto since long before it became a hot new thing and getting her insight into how it works and why it matters.
I think we're walking into what I've been calling a kind of schizophrenic digital world where we're going to have full-on surveillance and full-on kind of privacy. So that's why that neutrality of Ethereum is extremely important.
My name is Tom Ryan, and this is Welcome to the Arena, the ICR podcast. Each week, I sit down with today's business leaders to give you an inside scoop on some of America's most prosperous public companies, their origins, their challenges, and the keys to their success. Today, you'll hear part one of my conversation with Maja Vujinovic, the CEO of FG Nexus, which trades under the symbol FGNX. Maja has been a pioneer in financial innovation for nearly 2 decades. She built mobile payment and energy infrastructure across Africa and Latin America. She recognized Bitcoin's potential in 2010 and helped shape the crypto industry from its earliest days. Prior to becoming CEO of FG Nexus, she was managing partner of O Group, an early crypto and AI fund and advisory platform working with $4 billion plus in family office capital. Earlier, as Chief Innovation Officer of Emerging Tech at General Electric, she launched the company's first blockchain pilots with JP Morgan and has been a thought leader in the digital asset space for a really long time, bringing a rare geopolitical lens to the intersection of stablecoins, digital assets, and AI. Let's enter the arena with Maja Vujinovic. So I was saying before we hit record, like I've read the Bitcoin Standard and, Read Write owned by Chris Dixon. I love Tom Lee. I think everyone is like waking up to kind of this whole ecosystem, like you were saying, in the last 6 months. But, generally, I still think people they talk amongst friends and stuff, but they haven't done the research themselves. Like, what's your take on where we are inning-wise? Are we in the first inning? Are we not even up to bat yet? Are we in the second or third inning of this whole crypto ecosystem and how it's going to change the world?
Great question. I'll tell you, most podcasters don't start with that. Most start with, hey, tell me about your background and what's a blockchain. But
well, we'll get there. Yeah, we'll get there.
Without sounding too excited about the space, because there are still a lot of issues, obviously, but we are at a really interesting place in digital assets. I think we've seen a massive pivot from 2 years ago where we had the SEC chair put, everybody in jail that kind of said digital assets to kind of now opening it up to everybody and this administration pushing forward in kind of unprecedented ways. We also are seeing this past 10, 12, 13 years in crypto that really there have been a lot of pilots that have been done, right? So this is not anymore theoretical. This is here. This is, payments on a blockchain are there, stable coins are there, right? Real utility for AI is there, tokenization of stocks and bonds is there. Again, there are still many issues and there are still things that are missing, but it is quite exciting where we're at. And I think from a geopolitical point of view, it's fascinating to see what gold has done in the last week or two, as you've seen, and where we're at in terms of JP Morgan and BlackRock's realizing that, hey, look, this thing we've been doing with finance for so many years might not be working out for us in the long term. So we've got to look at the different ways to make money. And I think this is where I think it's most fascinating.
Yeah, I couldn't agree more. And if the light bulb has kind of gone off in the last 6 months for a lot of people, the light bulb went off for you like a really long time ago. How did you get into this space? Like around 2007 or whatever. It's just like it was nothing at that point. How did the light bulb go on for you? And what was your background kind of leading up to FG Nexus?
I got into Bitcoin in 2010, but prior to that, I was doing mobile payments in Africa. And I started in that in Africa and LATAM in early 2000s, working on different ways of moving money via kind of these feature phones before the smartphones or crypto even existed. And so I lived in these markets. We acquired telecom licenses. We built mobile applications, right? And I realized the money was just going to move in a different way. Did I know that Bitcoin was going to be at 120? I wish I did. I wouldn't have sold all my Bitcoin early days. But I think something clicked with me when I was in Africa, and I realized that every time I went back to the West and I spoke to my friends around movement of money on mobile phones, they would kind of look at me weird, like, hey, we have a visa. Like, well, I don't really care, right? This is not really difficult. But I realized for the rest of the world, it was really difficult. And then in 2010, I came across a Bitcoin white paper through a hacker network. And one thing that stuck with me in that Bitcoin white paper was peer-to-peer. And I thought, wait, I understand peer-to-peer. I might not understand what it means to mine Bitcoin, and I didn't. I was like, you mine gold and iron ore. What do you mean by mining Bitcoin? But what I did get was peer-to-peer. And I thought, well, whatever this is kind of interesting because I'm doing peer-to-peer. So let me just go and explore it, right? And that led me to coming back to the US. I started interviewing in hedge funds. Like they all wanted me for commodities. And I thought, that kind of made sense. And then came across a friend of mine actually at KKR who was a lawyer, called me up and he said, I got introduced to this company. We can't really take it. It sounds illegal. And I said, what is it? He goes, well, I think they did like a synthetic dollar or something. And I'm not sure, but we can't touch it. And I was like, I'll do it. Introduce me.
Sounds illegal. I'm in.
Exactly. I was like, sounds a bit edgy, so I'll go ahead and do it. And then I met with them. I met with them on Fulton Street, down in Subway, on downtown in Fidei. And I heard about the idea, and I thought, okay, half of it I didn't understand, but the other half I was like, wow, I just came back from emerging markets. If this is possible, this could be kind of cool. And I helped acquire first bank for Tether because nobody was going to bank Tether at the time. Nobody wanted to bank Tether at the time. Nobody would kind of wanted to mess around with that. And when I started working at GE, I went to present in front of the Fed about blockchain. And one of the high-ups at the Fed looked at me across the table and he said, we know about blockchains. We've been looking at digital dollars since 1994. I walked away from that meeting thinking, shit, like I need to be in this industry. I already knew mobile payments. I already saw a GE bunch of AI stuff and, fast forward things. And I thought, I'm sticking with this. And that's how it ended up happening. And I ended up launching a bunch of different pilots at GE, specifically one that's very important for our conversation, which is the first trade finance deal between JP Morgan and GE on Ethereum. And I invited Joe Lubin to come and kind of help me execute on that vision.
Yeah. So before we get into FG Nexus, which is very exciting, one of many digital asset treasury companies or DATs to go public recently, I'd love for you to do a service to the listening audience who I think a lot of times are like embarrassed to ask basic and dumb questions, but I'm not embarrassed to ask dumb questions. But what is a blockchain and what is Ethereum?
So think of a blockchain as at its core, right? Very simple. It's a shared digital ledger. Ethereum just makes it decentralized. It's neutral digital ledger. You can have Bitcoin blockchain. There are different blockchains. There are different digital ledgers.
Right. Bitcoin's a blockchain. Ethereum's a blockchain. Solana's a blockchain.
That's right. Yeah. Some are centralized. Some are decentralized, permissioned or permissionless. Right? So it is a kind of a database that is distributed across many computers or nodes that can be mined.
Decentralized.
That's right. Instead of being stored in a one central place like we have today, like a bank or a company server. That's as simple as it gets. How it works, also really simple. If I broke it down in very simple terms, is you have transactions. Those are like sending money or signing a contract or recording data. And they're grouped together into blocks. Okay. Each of those blocks is a cryptographically kind of linked to a previous block, forming a blockchain that cannot be changed without everyone noticing, right? Once you and I have recorded something on that blockchain, it can never be erased. Now, the ledger is also publicly verifiable. which makes, by the way, Bitcoin blockchain an incredible tool for NSA or for, any FBI or whatever, because you can check, anyone can check it, is secured by design. So since every kind of participant of a blockchain holds a copy and must agree, you and I and another person listening to this and another person listening, we must agree via consensus mechanism that we've developed or agreed upon before the new data is added. So think of it like a tamper-proof spreadsheet shared globally, where every line is time-stamped, it's validated, and it's locked forever.
So now that we have a firmer grounding on how blockchain works and why it could be useful, I wanted Maja to explain Ethereum's role in that whole decentralized ecosystem and what makes it special.
Ethereum, as I mentioned earlier, is a global decentralized computer. So it's a decentralized blockchain, right? It's an open network that anybody can use to move money or build applications without a central authority. And so now that you see Fidelity and BlackRock, all of those guys, they're all kind of building on Ethereum. It is powered by something called smart contracts. They are bits of code that automatically executes the agreements. No bank, no lawyer, which I know some people like, or a clearinghouse in the middle. Think of it. You and I and other 10 businesses agreed that we have a consensus mechanism on which we agree upon a certain smart contracts should be executed. Think of it like a financial internet, just as websites run on TCP/IP, right? Financial applications can run on Ethereum. So think of like these thousands of nodes that are running worldwide, and they ensure that Ethereum can never be shut down. It cannot be censored, right, or changed by any single actor. That's why it's also really important in the world that we're also walking into. And from a geopolitical point of view, I think we're walking into what I've been calling a kind of schizophrenic digital world, where we're going to have full-on surveillance and full-on kind of privacy. So that's why that neutrality of Ethereum is extremely important.
Yeah. And Ethereum will continue to get increasingly more valuable as more applications are built on Ethereum. What is the token itself? And what is the relationship between the success of Ethereum, people going on chain, and the value of the token itself?
First of all, the token of Ethereum is ETH. Okay, it's called ETH, it's ETH. And it's not just to your point, a speculative asset. I believe, and what I've seen, at least in my practice and others, and by the way, I am not an Ethereum maxi. I invest across the board. And I think that every chain has its purpose for certain types of utilities. Ethereum, it's not just my opinion, it's on chain. Everything is on chain. Everything is public. You have the most amount of stable coins built on Ethereum, most amount of tokenization that's built on Ethereum. So the Ethereum is kind of like a native fuel of the network. So every action on Ethereum, deploying a smart contracts, minting a token, let's say moving a stable coin, interacting with decentralized finance, requires Ethereum to pay for gas. And gas is essentially transaction fees. So as more applications and users and assets move on chain, the demand for block space, which is that finite source of processing transactions, right, increases. So that means more ETH is used, more ETH is burned under Ethereum's fee mechanism, and less ETH is available in circulation. All kind of while a large share is staked to secure the networks. So the more the world builds on Ethereum, the more demand there is for ETH, right? At the moment, we've seen that, and hopefully that's going to keep playing out that way.
For sure. And like a few data points, right? Ethereum powers over 70% of stablecoins. Ethereum also powers 90% of tokenized assets. We'll get to that in a minute, but there is a lot going on the Ethereum blockchain, and it's super exciting, right? I heard you say it's kind of the rails to push the dollar out globally, which is really kind of interesting, almost like an operating system for the dollar on chain.
So the way I think about this is most people will say, hey, look, the stablecoins are not any type of tool to push US dollar globally. I actually think that's wrong. They're not the only tool, but it is a way that does push dollar globally, right? And so it's about 65 to 70% of, as you said, stablecoins are on Ethereum. And most of that is US dollar. And so through those where the countries that need it the most, right, where places that, the money is worth less, inflation is high, right, those people would rather hold a dollar. Now, the follow-up question on a lot of people is, hey, but what's the difference? They can hold the cash. What's the point of this stable coin? Well, reality is, guess what? Instead of dad just holding cash, suddenly the daughter, right? It's a 10x. Everybody holds it digitally. And that's the power of it, right? You can interact with this whole new world that you weren't able to interact before.
I think that's like a good basic lesson in what Ethereum is and blockchain. And people need to like really do a deeper dive into all that stuff because it's really exciting. But with that out of the way, you're CEO of FG Nexus. How did that opportunity come to you? And what about this made you say, like, you know what, this is going to be a huge success and I'm going for it?
Yeah. So a couple of things. I think, first of all, FG Nexus, the name comes from the nexus of experiences. Kyle Sermonera, who's the CEO of FG Nexus, I'm the CEO of Digital Assets, has a experience in TradFi that is tremendous. And I have an experience, obviously, as we are talking about now, in digital assets that is extremely deep and broad, and I've been in this space as one of the first folks in the space, right? The depth of both is what is really interesting. Because again, that's on just one layer are treasury companies that hold an asset. But where this should be going, and where certainly we're looking at to go, is these companies have tremendous opportunity to turn into operating companies. And for that, it requires operating backgrounds like that Kyle and I and the rest of the team have. And when I look at across the digital asset space, I think most of them are either run by what I call crypto bros, right? And they're struggling to run a publicly traded company, or they're run by purely TradFi guys who have no connection and no kind of inroads in crypto.
They're like financial engineers, maybe, right?
Yeah, they have TradFi background. They've been, in banking or hedge funds or whatever, and they think suddenly that they're going to be in crypto. But reality is, if you look across the board, it requires a deep knowledge in crypto to build a company. Because everything in crypto, I look at sometimes, I have these conversations with our internal team, and from TradFi's perspective, a lot of things look attractive in crypto because you're seeing money being made in crypto, and so you think, well, we'll just go acquire this, or we'll go do this, and we'll launch this business, right? But there are so many bad things in crypto that it also requires kind of a perspective and a deep knowledge in it to say, actually, just because that has a great marketing doesn't mean it has a good team, right?
Yeah. It's a shiny object.
That's right. And so I think when we originally, when this was started, is one of our business partners also backed Metaplanet. And I've known them for 15 years. And he approached me and he said, look, we're looking for something to do like this in the US. And we need somebody who can do this in the US. And that's kind of how all this came about.
Yeah. And if you'd indulge the audience, maybe you can talk about kind of the value creation strategy for the company. I know accumulating the token at scale is very important. The speed with which you do that, I think, is important, but also kind of like staking and a yield-driven strategy. Maybe you can talk about why buying the equity in this business gives investors levers at their disposal for value creation.
Different strokes for different folks, as I always say. And it is a saying that's kind of funny, but it's true. I thought about it early days in this, and I thought, why would anybody buy a stock? Why can't I just buy this asset and do it, right? Do it myself. But reality is that not everybody's like you and I, right? And I don't know how proficient you are in crypto, but let's assume that you're really proficient. You've been in a space for 5-6 years, and you know how to hold an asset, you know how to go stake it, you know how to get yield on it, you know all of these things. Well, this might not be for you unless when these DATs start to transform, as I said, and they're suddenly becoming validator businesses, custodian businesses, they're acquiring treasuries, right? Then you have a much broader, a thing you're investing in.
It's a business.
Yeah, exactly. You're investing in a business, which again, I always remind people that give these DATs a chance. Some of these operating companies will turn into something. Some of them probably may not. And, we may merge with somebody will merge with us, maybe we'll get acquired, maybe we'll acquire somebody else. We don't know that yet. What I think people should be investing in general, kind of as I think about this, invest in something that has value going forward. Because if you're looking at crypto, you should not be looking at short-term trade. I've been in Ethereum since early days, and there were so many, there was 2021 that Ethereum went down by like 80 or 90%. I don't remember exact. Yeah, it was like 80 or 90%. And I still held because I thought, hey, I know where this is going. Like, I'm not in this for a quick turnaround. There are a bunch of shit coins out there you can be investing and coming in and out of. So I think for us at FG Nexus, yeah, it matters that we acquire Ethereum for sure. By the way, when we were raising capital, it was really interesting, Tom. There were other 10 ETH companies that were trying to raise at the same time. None of them came in. I think one came out on the market after us.
Yeah.
And they couldn't raise, right? And that's also a testament to what the leadership is, right? And what the backgrounds of people are. And so we started acquiring at the height of the Ethereum. It was like 4,600 or 4,700 or whatever it was, right? And then it was during summer and et cetera. And then Ethereum has come down. And so I think, yes, acquiring Ethereum for us, it is ETH per share. But going forward, we are already starting to explore a number of different strategies that we can be doing. We also had 3 or 4 companies approach us recently to say, hey, look, we have a revenue of 30, 40, 50 million in crypto, and we would like to we'd like to go public. So we want to trade paper, right? And so that's also something we're exploring live at the moment to seeing which kind of businesses could be actually accretive to us, right? So all of those things we are thinking about.
That was part 1 of my interview with Maja Vujinovic, the CEO of FG Nexus. To hear more of her thoughts about the future of blockchain and Ethereum and the role AI might play in all of this, tune in next week for the second part of our conversation. Until then, I'm Tom Ryan, and we'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.